long, go short when your mechanical system tells you. Totally fine. You can make a lot of money that way. If you're a swing trader or a position trader, it is long only for the next 2 years. 2024 and hopefully 2025, it should be long only. So you have your patience, you wait 7 days. You then, Solana is going to be one of the coins you're tracking, right? This is why you should have 5, 6, 7, 8 coins you're tracking, especially as a swing trader, because you've loads of time to act. Solana would have pinged you a trigger when it hit this high at 11 a.m. on the 29th of June. You get an alert on your phone and it says, Solana, BOS, question mark, check the charts. You go in, was there a break of structure? Yes. On the 4 hour? Yes. Was there high volume? Yes. What do we do now? Now we get ready for action. And that was 11 a.m. And here's what's really important. This is loads of time. This is all the time in the world. It doesn't look like it here, of course, but when we zoom in to the 1 minute chart, this is what's going on, right? If you're on the 1 minute chart after you got that alert at 11 a.m., you are just setting yourself up to get fucked. Because look at this. It's so confusing. It's so messy. It doesn't make any sense. That only makes sense to scalpers and day traders, right? A swing trader does not need to be here. He is playing the long game. He's playing a much bigger picture view. So get off the 1 minute. Get off the 5 minute. That also looks like shit. And get on to the 1 hour. 15 minute is fine, by the way, which I'll show you in a second example. And here we are. So, first entry, done. The rule is valid break of structure on the 4 hour chart, down to the 1 hour chart, first touch of the bands, get in. And then, wait. No rush. Invalidation is set, and we let it play out. And so, price continues to play out, and immediately you see it breaks higher, right? So, excellent breakout, excellent entry. You nailed the bottom. You absolutely nailed the bottom of that move. Now you're probably angry. It's only got quarter of my position filled. Fuck, and I knew it was going to go against me. Watch this lesson a million times if you need to. This lesson will stop you from making the cardinal sin of saying, I'll just get the rest of my position on up here. That is not professional. You got a fucking nailed entry. Understand that the market, you're building positions, okay? So, don't worry that it went away. In fact, get up and give yourself a high five and fucking have a coffee and say, wow, I did it. And not to the point where you're getting euphoric. No. Congratulate yourself on a process well executed. That's stage 1. You've done it. The absolute best thing you could ever see when you buy a coin is that it goes up really fast. That is exactly what you're doing, right? It means you're right. The market's telling you instantly that you're right. Now, second thing. Remember I talked about the 50 MA? This is where the other swing traders want to get on. Look how far we are from the 50 MA. They got left behind. So what are they doing now? Their emotions are being tested. You're in. You're chilling. Quarter of a position on. Away it goes. They're panicking. Some of them are going to fuck up. Some of the people who got a quarter on that can't handle it, they're going to fuck up. They're going to FOMO. Anyone who missed this breakout and is seeing the second one is going to fuck up. Anybody who's on the 1 minute chart and is looking at Solana up here. Again, they're too zoomed in and they're not really a day trader. They're watching all this nonsense here. And they're seeing it go up. And go up. I have to buy. And they're all either too zoomed in or they're zoomed out and they're waiting for lower. Or they entered where you entered and they panicked and sold or bought more here. All those people making mistakes are going to be your liquidity for your next entry and subsequent entries. So, what can you do? Now, you can absolutely add on the valid break of structure. So here we see a break of structure with above average volume. Put the volume MA here. We'll put it in black. this candle, above average volume, break of structure, as in it closes above the highest close from before, you could add 0.25 there, right? That is fine because that is part of your plan. And you enter on the close of that candle, right? So there's your second quarter. But you're not FOMOing because, again, let's rewind it a little bit and let's play this. Let's play it now because psychology is so important. Psychology is everything. Mechanics will get you into a trade. Psychology will take you out of it, whether it takes you out in a fucking coffin or takes you out in a golden chariot. It's entirely up to you. Your emotional decisions, your psychological decisions when in the trade will be the differentiator between whether you print massively or end up on the rect sheet. So, right now as you're watching it, you're actually a little hesitant. You're like, okay, it's grinding up to the highs, it looks good, but our brains, our monkey brains, only think that this looks good once it's above here, right? That's what everyone's looking at. Everyone's eyes are drawn to the wick. Is it going to make a new high? Is it going to make a new high? So you're like, okay, good, I got in, it's nice, and I don't feel any FOMO to enter more. Maybe it's going to drop down and get me a better entry. And then it goes up, right? And then it does that. And then you get a close above you. Oh, wait, there's a valid close. Above average volume. Boom, I'm in, number 2. And you don't feel euphoric because you're like, well, you know, it could still maybe deviate the highs and then crash, right? Your mind thinks all these things. The bear here, the bearish price action trader, sees a gap. And he thinks, these fucking Solana idiots, don't they know that the FTX estate are selling a bunch of Sol or whatever? It's going to go up, it's going to go like that, and me and Capo are going to go to the fucking pub and celebrate over probably a pint of 1% beer because he can't afford anything else after shorting Bitcoin all the way from 12k to 42k. Anyway, all in good fun, of course. And so we play on, right? And then you get those candles that make everyone else FOMO. So you got your perfect entry, you got your nice second entry before any other people get FOMO, and you're in before all the FOMO, right? FOMO, 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 and we play it on. Let's see where it goes from here. So price, there we go. That's going to wreck them. So, maybe I should, reverse it ever so slightly. At this point, you're chilling because your entries are great. Remember, your invalidation is down here. Your invalidation is down there. So you are sitting pretty. The 50 MA buyer has already FOMO'd in. The apes at the top, they've FOMO'd in. They've all broken their plans. You've stuck to your plan. We keep going. And we play it on one tick at a time. This break here is what will have caused so many bad trades. These people, because look at this nice consolidation, breakout from it. These people are going to have fill longs that then cause all of this. Right down through the 50 to where the 50 buyer gets wrecked. If he bought just on the line, he's probably bought with leverage and he's out. You're still chilling. It wicks down past your entry, sure, but your invalidation, of course, is nowhere near it. That's why you use the strong impulse candle. And then we allow it to play out. And what happens? Immediate V reversal, and away it goes. Pumps again off the V reversal. Now, at this point, you're sticking to your principles. The breakout was on the 4 hour. The first touch of the bands on the 1 hour was your trigger to get in. That's how you get in to an early breakout, right? Then you size up as it goes towards a breakout. From that point, you can now add the rest of your position whenever you deem fit. So that might have been after this reclaim, right? So whenever you had price coming all the way down through the bands and then reclaiming the 1 hour bands and they're still inflecting upwards, get in. Okay, so entry, and by the way, I don't go in quarter. At this point, you've had everything you want to see. This is where the other half goes on and you're in, right? 0.5 sol in. Now, let me see this. There we go. So, why there? Because when you're thinking of the traders who have come before you, you get in at the perfect time, they FOMO'd above, they started FOMOing, kept FOMO'd, they got wrecked. So they're all taken out. Where does the market reset to? Recovers all the way up above the 50, right? So then, not here. Here it could go either way. 1, 2, you don't know. 1 hour candle impulses through the original 1 hour bands. So we are still in a really strong 1 hour uptrend with the bands inflecting upwards. If you know what that means the bands as you see them on the candle are pointing this way. They're pointing up and to the right. Whereas if the bands were flat, that would be a sign that there was a bit more damage done here. And of course, if the bands had pointed downwards, that means we're in a downtrend. So they're pointing up, it's there, it's below the highs. Guess what? Don't be afraid of buying below the highs here, because you know where other people are going to buy. Above them. You've had everything you wanted to see. You're in profit on trade 1. You're in profit on trade 2. Forget this big red candle. You're in profit on trade 1. You're in profit on trade 2. The market is telling you you're right. We are now here. Those are in profit. You're way away from your invalidation. Get your position on and allow it to play out. Okay? You'll see why in a second. Alright, and then so we let the market play on and do its thing. It retraces back down, but no worries. These things can happen. And then it continues on into some more sideways action. So I'll speed it up a little bit in a second. I want to take off that 50 EMA because it's not needed now. So now you have your position filled. Excuse me. You get this. And at this point, once you've had your fills, right, execution is on the 1 hour time frame, but this is a 4 hour chart, 4 hour trade chart. And now I'll show you the magic of the time frames. If we go back to the 4 hour now, and now we look at it, look how perfect this is. All it had was one crazy wick, but the bands, solid, early stage, 4 hour trend, right? Impulse candle, defended, full trade on, full size, and the market is now just pushing nicely. You will watch this trade, you will monitor this trade on the 4 hour chart. If you start to monitor it on the 1 hour, or monitor it on the 15 minute, or the 5 minute, or the 1 minute, it's going to make you close too early. So now, your exit rule, let's keep it simple. The exit rule is when the 4 hour EMA bands turn red. Okay? We're going to ride a strong 4 hour trend. And let's play it on. There we go. See there, they almost turned red. Never, ever, 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 ever preempt bands flipping red. They were going to flip red because it was a little trap, but they didn't. Wait for the candle closes. And look at that. Imagine you closed on those 4 hour red bands. You'd be kicking yourself right now, but you didn't because you are a professional. And away we go. And there they go. Right, so now they properly turn red. We had a big overextended spike. Absolutely nothing wrong with anyone taking profit there. Regardless of what price does next, you don't need to stay in the trade if you don't want to. You can if you want to. You could maybe take partial profits. So at this point, you might want to take off 50%. Okay? So you might want to take 50% profit. 50% profit at that level. And I'll just play it on to see. That sometimes it works, sometimes it doesn't, right? But maybe you take half profit. We'll see how it plays. I recognize this price now. This is short. Solana goes down. Yeah. So there's an example of taking the 50% profit, not working. There are examples of where it works. Up to you. Choose to take full profit. Choose to take 50%. That's up to you, okay? So, let's just say we take TP here. All right? Now, your entries. You got, if I get the lines drawn across, you got 50% on, 25% on here, 25% on here, and you got 50% on here when you had your confirmation. Yeah? So just for argument's sake, I'm going to say that the average entry was in the middle here, even though it's actually slightly higher. But let's say the average entry was there. Your invalidation was down here at this level. And then I'll take all this off because you've seen this and you can rewind it. I'll take all this off so that it's cleaner. And we can just see, there's your invalidation. We can just see the trade you took and how it played out. You took the trade from there. You ride it all the way up. And there is a 4.43 hour trade that plays out over less than 3 weeks, 2.5 weeks. One trade, never at any serious danger because you choose the right invalidation. You take the correct entry method, you ride the 4-hour trend, and then you get out. Okay? That's how it's done with the 4-hour and the 1-hour. Now, you can get even better and tighter entries, right? There are ways to get into these trades. There are ways to move your stop loss up and add size, which is known as compounding. There are ways you can turn this 4-hour into a 8 or a 10. However, understand that when you do that, you do also increase the risk of losing. Because if you have it 8-hour or a 10-hour, the probability of that trade playing out will be lower. There's no such thing as a 10-hour trade that has a 75% chance of hitting. Yeah. So higher risk reward means you'll take more losses. So you can keep knocking in your 4.5s, your 4.5s and 4.5s and just trying to get a 50% win rate. Go and do that into your calculators, right? Your expected value calculator. And you'll see that if you can get that, if you can time these and you can get these even 50% of the time, you will come out way ahead in the long run. So that's the H4 and H1 full breakdown. Hopefully it makes sense. Any questions on it, please ask me in the chats. And I'm also going to show another one. And this one is going to preempt a common question. What if it doesn't touch the bands? Right? Remember that first entry that we nailed on the 1 hour? What if it doesn't touch the bands? Can you still use this method? Yes. Because the method is not about does it touch the bands perfectly, exactly, definitely all the time. The question is, are the bands being respected and does it produce a new leg? So, how do you know this is a breakout down here? This candle. I'll drag this over. So we had this really nice bottoming formation on Filecoin. Now, if you're lucky enough, and we are still early, guys, if you're watching this in December 2023, if you're lucky enough to spot any price action like this, you know these lovely bottoming ranges that we've been seeing? If you've spotted any of these, many of them have already broken out, but there are some coins that haven't. And now, yes, they're shit coins, but are they going to have their time to run? Yes, they will. So, how do you find it? Well, first of all, you're not going to go on a daily chart, right? Because if you go on a daily chart and you only check Filecoin on the daily chart, you will see this. And by the time it closes, it's way above, right? It's way above entry. And maybe you enter on the daily close. Of course, that ends up being a massive trade, but that's in hindsight, right? But let's just hypothetically say you entered on the daily close, your stop loss goes below the daily, right? Because in your daily time frame, all you can see is this candle. So the impulse starts there, right? Impulse starts at 23.75. You get in at 27.6. And then you ride it all the way up. And let's imagine you get out after the second false breakout, right? So you have a high, first false breakout, sorry. And then that closed there. You're like, oh, that's pretty big false breakout. I'm going to close there. That would get you